Hi, hi everybody. This is the second lecture for topic 2. This lecture is the first lecture in week 2. Okay, so this is still in topic 1 of the course. We have covered the half of the topic last week. So today we will continue with this lecture notes. Okay, how do the changes in contemporary business environment affect cost management? There are many changes in the business environment nowadays. I think the main factor that causes the changes is the use of internet and information technology. So everything has to be done quickly now, and business has to focus on global market rather than local market. So these are the things that how do the changes in the contemporary business environment affect the cost management. So let's see, the management accountant's role first, provide strategically relevant cost management information to help the organization keep up with the ever-changing environment. So management accountant help organization to keep up with the changing business environment. Second is this requires the development of critical success factors, measures of performance that are essential to competitive advantage, and then management accountants have responded to the contemporary business environment with 13 contemporary management techniques. Okay, so these are the things that management accountants are doing to keep up with the changes in business environment. So there are 13 contemporary management techniques. So these are the contemporary management techniques used or proposed by management accountant. So first one is the balance scorecard, and then value chain, activity-based costing and management, business analytics, target costing, life cycle costing. Number 7, benchmarking. Number 8, business process environment improvement. Number 9, total quality management. Number 10, lean accounting. Number 11, the theory of constraints. Number 12, sustainability. 13, enterprise risk management. So these things are important. These things are important important techniques in management accounting. So this course is an advanced management accounting course. So I think at this stage, at this topic 1, you have to know in brief about these 13 techniques. So let's see one by one. So the first one is the balance scorecard and the strategy map. This technique will be discussed in chapter 2, 12, 18 and 20 of the Blocher textbook. I think most of you you already know what is about the balance scorecard. It is an accounting report that addresses an organization's performance in 4 perspectives: financial, customer, internal, processes, and learning and growth. If you can remember, when an organization want to increase their performance, particularly their financial performance, the first thing they have to manipulate these 4 aspect of perspective in the balance scorecard. I think it has to be started with the learning and growth. They have to train their workers, and then improve the internal processes, and then satisfy the customer, and then the business can enjoy the financial success or enjoy good financial performance. And then the strategy map. So this technique is related to the balance scorecard technique. And then the next thing is the second technique is the value chain technique. You can see discussion about this technique in chapter 2, 13 and 17 of the textbook. It is about an analysis tool used to identify the specific steps required to provide a competitive product or service to the customer. Helps identify steps that can be eliminated, improved or outsourced. Value chain. Yeah, it is a technique related to the evaluation of every step in the processing of producing product or providing services. And then number 3, activity-based costing and management. Activity-based costing, you have learned about this in, I think, ACT 3131 and also ACT 3132. It is a very good technique. It helps you to calculate costs more accurate compared to the traditional costing. That is one good thing about ABC. Another one is it is also can be used to improve operation and management of a business. How it can be like that? Because when you apply activity-based costing, you have to identify the activities that happen in a business or organization, and then you can use that activities to calculate costs. At the same time, you can use that knowledge about the activities in the business to improve the management and operation and control. Very interesting. And then number 4 is business analytic. This is another technique. It is an approach to strategy implementation in which the management accountant uses data to understand and analyze business performance. You will see this technique in chapter 8. Technique number 5 is called target costing. It is a method that has resulted from intensely competitive market. Target cost equal to market determined price minus desired profit. Target costing is something like this. When a business wants to produce a product, the business set a target. How much they want to spend for when they produce the product. It can be a unit cost. Maybe based on their observation in the market, they only can produce the product with a cost of, let's say, $120. That's all. If they produce the product at a cost of higher than $120, then they cannot compete in the market. So that is the thing that related to this technique. So the target cost is equal to market determined price minus the desired profit. Let's say the market price is $150. The company wants 20% profit. So if the price in the market is $150 for the product, and then the target profit, the desired profit is 20%, then the target cost is $120. The company has, or the business has to produce the product at a cost of $120 or less. Otherwise, the company cannot sell its product. Okay, that is something like that. Target costing means the business has a specific amount of cost that they can afford for producing a product or service. Otherwise, their product cannot be marketed or cannot be sold. Okay, life cycle costing. This technique will be explained further in topic or chapter 13 of the textbook. Cost should be monitored throughout a product entire life cycle, from research and development to sales and service. Number 7 is benchmarking technique, process by which a firm or a business identifies its critical success factors, studies the best practices of other businesses in achieving these critical success factors, and institutes change based on assessment results. Benchmarking. And then number 8, business process improvement. This technique involves managers and workers committing to a program of continuous improvement in quality and other critical success factors. Number 9, total quality management. You can see more about this technique in chapter 17, a technique by which management develops policies and practices to ensure that firms, products and services exceed customers' expectation. Number 10 is lean accounting. Measures the financial benefits of a firm progress in implementing lean manufacturing. Lean manufacturing process is something like the business is running the production process in the most cost efficient way. They try to be the most cost efficient in the production process. So there's something. So when the cost is can be trimmed down, then the business can achieve a better financial performance at least. Number 11, the theory of constraint, also will be explained further in chapter 13 of the textbook. Helps firms improve cycle time. That is the rate at which raw material can be converted to finished products. Number 12, sustainability. Means the balancing of the company's short and long-term goals in all three dimensions of performance: social, environmental, and financial. So this is hot topics now. Many big companies, particularly, they are trying to be sustainable, to operate at a sustainable level. They are not only focusing on financial performance, they are also considering the social aspect of their operation and the environmental aspect of their operation. So if a business only focusing on financial aspect only, they can perform well, but maybe they cannot sustain. Sustain means, I think the simple definition for sustainable business is the business can exist and continue to perform very good in the long run, in the long term. So if a business wants to continue to exist and perform well in the long run, they cannot only focusing on financial aspect of doing business, but also they have to consider or to do good things, and has to maintain the social aspect of the business and environmental aspect of the business. They have to have they have to make sure they do not harm the environment. So when they do not harm the environment, they can continue to operate in long term. If they harm the environment, then the possibility is they cannot continue to do business in long term. Okay, same goes to the social aspect of social aspect in the business operation. They have to have a good social practice so that the company is can exist and can continue to success in the long term. Okay, number 13 is enterprise risk management. It is a framework and process that firms use to manage the risks that could negatively or positively affect the company's competitive and success. So the 13 techniques that you just have seen in the previous slides will be you will see the detail about these techniques in the later chapters, in the later topics, and you can read them in the textbook and other sources. They are very interesting. It helps you to understand the function of management accountant and management accounting in organization or in businesses. So how management accountant can use these techniques to help organizations and businesses to achieve their goals. Okay, this is about how an organization succeeds competitive strategy. A firm succeeds by implementing a strategy, that is a plan for using resources to achieve sustainable goal within a competitive environment. Strategy must have long-term focus and adapt to the changing environment. Cost management is used to develop costs and other information to help an organization achieve its strategic goals. So see here, the main point is a business or a firm can achieve financial success or total success if the business has a plan and use the plan to achieve its goals and objective. And the goal must be a long-term goal. Otherwise, it is less meaningful for a business. The success must be a long-term success rather than short-term success. So, to success, there are many factors that determine a business success. One of the things that can help a business to success is the cost management or management accounting. Cost management or cost accounting or management accounting. Output of management accounting or cost accounting can help business to achieve its objective or goals. Okay, according to Michael Porter, there are two competitive strategies that a business can use to become success. First is called cost leadership, and the second strategy is called differentiation strategy. So cost leadership strategy is about outperform competitors by producing at the lowest cost, consistent with quality demanded by the customer. If a business uses cost leadership strategy, then the business is trying to produce a product at a cheaper cost compared to the competitors. That is what the company or business will do. But if a company use differentiation strategy, it is about creating value for the customer through product innovation, product features, customer service, etc. The customer is willing to pay more for these added values. So if you have a business, to make your business success, you have two alternative strategy. You can choose cost leadership strategy. If you choose cost leadership strategy, you produce your product at the cheapest cost compared to your competitor. So you can sell your product, a good product at cheaper price. Then you can success. One of the strategy. Another strategy is differentiation. If you use differentiation strategy, you create value for your customer. You make your product different compared to the competitor, different in terms of innovation, features, customer service, etc. When your product is different and the difference is a good difference, then customers are willing to pay more for your product because your product is different and better compared to other product in the market. So customers are willing to pay more for your product if you have that kind of difference. Okay, so there are two strategies according to Michael Porter. So these are the difference between these two strategies. So you can see here, cost leadership and differentiation strategy. So strategic target for cost leadership, the strategic target is broad cross-section of the market. For differentiation, the focus is on section of the market. I think the Apple product, iPhone for example, is an example of a business that uses differentiation strategy. You see, Apple, one of its product is iPhone. iPhone, it looks like Apple, when they produce iPhone, they are using differentiation strategy. They make the phone special compared to other smartphone, and with that special features or design or anything, they can sell iPhone at a higher price compared to other smartphone, but still people or customers purchase iPhone. So that is differentiation strategy. Okay, and then basis of competitive advantage is cost leadership. The basis of competitive advantage is lowest cost in the industry. Differentiation, the competitive advantage is use unique product or service. In terms of product line, cost leadership, limited selection, differentiation, wide variety, and then in terms of product emphasis, lowest possible cost and essential features for cost leadership. For differentiation, for differentiation strategy, innovation in differentiating products. Market emphasis, cost leadership, low price. Differentiation, premium price, and innovative features. Okay, these are the 5 steps of strategic decision making. One of the role of management accountant is to help manager to make business decision. So these are the 5 steps of strategic decision making. So let's see. First, determine the strategic issues surrounding the problem, and then the second step is identify alternative actions. So this is, I think you have learned this before. In accounting, if you want to make a good decision, first you have to know what is the problem. And then the second step, like this, is you have to identify alternative solution for that problem. And then number 3, you do analysis. For each for each alternative, you do analysis. The basic analysis is cost-benefit analysis. You have to show the cost if you choose this alternative and the benefit of this alternative for every alternative. After that, based on the strategy and analysis, choose and implement the desired alternative. After you have analyzed each alternative, you choose the best one. And then number 5, provide an ongoing evaluation of the effectiveness of implementation in step 4. So you just evaluate the decision from time to time to improve the situation. Okay, this is professional organizations. This is about the management accountant. So in these notes, this info is related to US, United States, because this textbook is coming from US. So we focus in Malaysia, organizations that provide guidelines and regulation. So maybe the organizations that provide guidelines and regulation for management accountant in Malaysia is like Inland Revenue, maybe the LHDN, and maybe there are several more. Maybe Bursa Malaysia, maybe Securities Commission, maybe they can provide guidelines and regulation that can affect the practice of management accounting in Malaysia, maybe. And then the organizations that promote professionalism and expertise for management accountant in Malaysia. I think the most frequently mentioned professional accounting bodies for management accountant in Malaysia is CIMA, Chartered Institute of Management Accountant. So CIMA, if you want to be a management accountant, it is a good idea to become a CIMA member. They have professional exams and also I think trainings that can that is useful and appropriate for a management accountant. So in this lecture notes, you can see the Institute of Management Accountant. These are professional bodies in US. Okay, so in Malaysia, as far as I know, the most popular one for management accountant is CIMAS, Chartered Institute of Management Accountant. Professional certification. So to become a member of CIMA, you have to do several. You have to take several exam papers, and also I think you have to have experience working under an accountant. After that, you will get the CIMA membership. Okay. This one is important. So now it is not only you have to have a good knowledge and skill about management accounting. Now all professional bodies also require that their member to have to maintain high ethical to maintain ethics, good ethics. You have to be you have to maintain several ethical aspects when you do your management accounting works. So the thing is almost same for all professional bodies. They ask you, these are the 4 most common ethical aspects that a management accountant has to maintain. The first one is competence. A management accountant has to be competent. He or she has to have sufficient skill and knowledge about about management accounting. Okay, and then integrity, confidentiality. A management accountant cannot disclose information about its organization to people outside the organization. Management accounting information are confidential. So if you are a management accounting, always remember things happen in the organization are confidential. You cannot disclose them to outside the organization, except if you are required by law. Somebody you have to let's say you have to become a witness in court, then you can disclose internal information in the court. Otherwise, you cannot disclose or say anything or share internal information about your organization or business to other people outside the business or organization. And credibility, you have to have credibility. So that are the 4 most common ethical aspects that a management accountant has to maintain. And then also how to apply the statement. So let's see the second point here. So if you are a management accountant and you work in a business or in an organization, sometimes you see something unethical happen. So what should you do? Okay, so see here, there are 3 steps. As far as I know, these 3 steps are the steps suggested by most professional accounting bodies. So if you are a management accountant, you work in an organization, you see something unethical, what to do? So see here the second point. Step 1, to discuss the issue with your immediate supervisor. Talk to your boss. Let's say you do management accounting work and you found something fraud happen, or misuse of business fund. So what to do? So first thing is you have to discuss the matter with your immediate supervisor. If the problem is settled, then you stop. You don't have to do anything more. If you cannot settle the problem when you report it to your immediate supervisor, then you have to go to the second step. You have to discuss the matter with your professional accounting body. Let's say you're a member of CIMA. You see something unethical happen in your organization, you discuss with your boss or supervisor, immediate supervisor, the matter cannot be settled. The second step that you have to do is you have to talk to the CIMA. They have people there that can handle that can give advice about this unethical things. And then if you can settle that, then you stop. But if you cannot settle the problem, then you have to go to step 3. You have to consult an attorney, or you see a lawyer to get legal advice about the matter. Okay, I think the last step is to just resign from the organization. If you cannot settle the problem, then you resign. That is the way suggested by the professional accounting bodies. Okay, this is the summary of the chapter. See the first one. The first point is cost management is the development and use of cost management information by the management accountant. Cost management information is used in all four of management functions and is important in the pursuit of firm's mission and goals. So it shows that cost management information or management accounting information is used in all four management functions. So very important. Always remember, for a management accountant, their main responsibility is to help manager to make business decision, or to help manager to achieve the business goal and objective. And management accounting information and cost accounting information can be used at all four levels of management activities. So very important. See, the contemporary business environment has increased the level of competition faced by organization and has influenced the role of management accountant. So when the competition is very stiff, manager has to work hard. At the same time, management accountant, who is supposed to help manager, also has to work hard and to help the manager to do their works. So, and then you have seen 13 techniques used by management accountant to help managers to achieve their goal or to do their management activities. Thank you very much. This is the end of the lecture. And then do not forget to write your name and matric number in the comment section. I will take that as the lecture attendance for today. Thank you very much.